But
Yeah.
the first one is policy loans. So we kind of mentioned earlier just a little bit about infinite banking.
Mhm.
Uh, so that's one way you can use policy loans is, you can take a loan from your life insurance plan, that accumulated value in your whole life plan or your IUL, and you can go buy an asset, have that asset, create enough, income for you that you can pay that loan back or
Yeah,
not.
I just found out that Wells Fargo, Bank of America, JP Morgan Chase are the biggest holders of life insurance in this country, are those institutions. So they're
Yeah.
doing the same thing. Their insurance companies are paying out, and they're very solid, A plus rated. They rarely default on their obligations, not like the banks do. The banks are over leveraged. Insurance companies do not have that kind of leverage in terms of what they do with their funds and their due diligence. So yeah, same thing. Taking a loan out, buy something, pay it back, and yeah. And plus, the thing about that is that the interest that you're compounding, that contract you signed that up 10 years ago, you're getting that same interest for life of that policy. It doesn't change. Once that policy is written, that policy, the interest rate that you're getting credited to your account is for life on that policy. You take a life insurance policy, you take a life insurance loan against it. I spoke with them. You're just collateralizing your collateral. Your life insurance policy is your collateral. So, in the event that you pass away, they're going to take away obviously any loans that you had against that you owe to the insurance company, and they'll just pay them off, and whatever is remaining will go to your family. So technically, you don't even have to pay back your loans. You can take a policy out, take a loan, and just not pay it back because your policy is still compounding and still growing and still building cash value to sustain itself, and that's a great thing as well.
Yeah. Businesses use IULs to generate bonuses for their top employees. That's a thing.
Yeah, business
So
owners. We can talk about that in the next episode. There's so much stuff that we can
yeah,
talk about.
yeah. So we won't dive too deep right now. So, but the second way that you can use life insurance while you're alive. So a lot of policies, and it's very important that you ask your agent this. A lot of policies have riders, most of which, there are some that have additional costs, but in most cases, the ones I'm going to mention here come built into a policy from a really good company. In fact, we work with NLG, and they have all of these riders I'm going to talk about. Some companies have a few, some have one or two, but the first one being the chronic illness rider, critical illness rider, critical injury rider, terminal illness rider, and the fertility rider. So, kind of like what they sound like. If you have a chronic illness, a critical illness, this is like a heart attack, a stroke, cancer, things like that. There's a list of like 7 typically. Critical injury. So if you sustain an injury that puts you out, a broken hip, something like that, there's a payout for that. Terminal illness, whether it's 12 months or 24 months, depending on the state that you live in. If you're diagnosed with a terminal illness, the insurance company um, will advance you all or a portion of your death benefit up front.
So like
So
a wish list if you want to go on a trip and do stuff before you pass away. Obviously, you can use that money.
yeah, if you have a heart attack, obviously you can't work, can't pay your premiums, things like that. So they're going to give you a lump sum of money from your death benefit up front. Yeah.
Okay, lifetime income right as well. So okay, can anyone? This is a good question. Question number 8. Can anyone qualify for life insurance?